The dollar continues to show concerns of weaker pound and intensive tightening by the U.S. Federal Reserve. The possibility of intensive tightening has increased, including the implementation of an additional giant step by the U.S. Federal Reserve. Giant step is a 0.75 percentage points increase in the key interest rates. The British pound also fell sharply. Concerns about the slowdown in China's economy also overlapped. As the two major pillars of the Asian economy, the Chinese yuan and the Japanese yen fell sharply. The possibility of a second foreign exchange crisis following 1997 became a reality. Japan, which has suffered from inflation for the past decade, has not been able to afford to raise interest rates, so it is sticking to its monetary easing policy. China is pushing for a rate cut to prevent its own economic recession due to the zero corona lockdown policy. If the yen breaks through 150 yen per dollar, an Asian financial crisis like 1997 could come. Above 150 yen, Western capital could be the trigger for a massive departure from Asia. The yuan-dollar exchange rate is also rising day by day. On the same day, the People's Bank of China announced that the exchange rate for the yuan against the dollar was 7.0298 yuan, up 0.0378 yuan from the previous trading day. It is the first time since July 7, 2020 that announced the exchange rate exceeded $1 equal 7 yuan. The yen-dollar exchange rate also fell to the 140 yen level due to the intervention of the Bank of Japan, and then rose to the 144 yen level. The Korean financial market also faltered again on September 26. On September 26, the domestic financial market faced a Black Monday as concerns from high-intensity austerity in the US and bad news from Europe, including the UK, overlapped. The $1 exchange rate surged by more than 21 compared to the battlefield, breaking through 1,435 won and closing at 1,431.30 yuan. Based on the closing price, it was 1,441 on March 16, 2009, right after the financial crisis, the highest level in 13 years and 6 months. The won recorded the largest daily decline in 2 years and 6 months since March 23, 2020. The 3-year government bond yields also showed symptoms of seizures exceeding 4.5%. The Kospi also plunged more than 3%. The Kostak also plunged 5%, falling below the 700 line. On September 26th, in the Seoul foreign exchange market, the $1 exchange rate closed at 1,431 won, 30 June per dollar. up 20 to 1 from the previous day's closing price. It is the first time in 13 years and 6 months since March 16, 2009 that the exchange rate based on the closing price exceeded 1,431. The main reason for the sharp rise in the exchange rate on the day was the sharp rise in the value of the dollar due to a sharp fall in the value of the British pound. The dollar index, which shows the value of the dollar against the currencies of 6 major currencies, closed 139 on the day. The Kospi closed at 2,220.94 down 69.06 points from the previous day. Based on the closing price, it is the lowest level since July 27, 2020 and the year-end low. After the index opened at 2,260.80 down 29.20 points from the previous market, it quickly declined slightly from the beginning of the market. Individuals net sold 244.6 billion won, leading the stock market down. The Kospi drop was the biggest in 2 months since June 13th. The Kosdaq index closed at 692.37, down 36.99 points from the previous day as the 700 line collapsed. The Kosdaq index closed below the 700 line for the first time in 2 years and 3 months since June 15, 2020. On the same day, the Kospi market cap decreased by 54 trillion won and the Kosdaq market cap by 16.6 trillion won respectively, and about 71 trillion won of the market cap evaporated from the stock market. In a report on the National Assembly's Planning and the Finance Committee on September 26, Lee Chang-yong, governor of the Bank of Korea, said the U.S. Federal Reserve will raise the key interest rate by 0.75 percentage points at the Federal Open Market Committee in November and raise the interest rate to 4.4 by the end of the year and 4.6% next year. Lee said we will formulate a policy taking this into account, he said. He also said there should be a sufficient discussion with the Monetary Policy Committee on the specific scope, timing and route of the rate hike. Will market decision with the Monetary Policy Committee members, taking into account the possibility that the risk in the foreign exchange sector will increase, he said. With Governor Lee's remarks, the market predicted that the BOK will take an additional big step in raising the base rate by 0.5 percentage points at the MPC meeting next month.